Diving right back into the numbers this week, we're going to be talking about China's GDP growth or gross domestic product growth, kind of how their economy is growing, as well as talking about the European Central Bank. They had their interest rate decisions this week. So let's just dive right into China. We saw their GDP growth from Q2 to Q2 year on year. So from the previous year, it's at 4.7%. This is the slowest growth rate in a while, actually, for China in terms of kind of where they're going. And it's kind of disappointing numbers. They were expecting a little bit more from their economy, and it's seeming to continue to lag. What are your kind of insights when you look there into that situation?
Yeah, China has been a concern on a global level for quite some time now. And the forecast was that they are going to grow 5.1%. And we see 4.7% coming down from 5.3% for Q1. It's still in line for the yearly, like 2024 GDP forecast, which will be or should be 5%. So they are still in line on that, but it is not very like positive outlook as well, especially when you see other economies at the moment. They are starting to struggle more as well. Europe isn't doing really well, and we also see more cracks in the US, as we have said or mentioned several times in the past. And so it will be interesting what Xi Jinping will do about that. They are now having their Congress or their summit where they're discussing how to develop the economy, how to move forward. And there is a lot of protectionism and a lot of socialism within the party and with coming from Xi Jinping. And so he tried to control the rich and the tech companies in China. It didn't really work out. Now, on top of that, we have structural issues when it comes to their real estate markets as well. And the people are just not very consumer friendly. They are not spending as much as they probably should to keep the economy running because they're just scared of what's there and how everything develops.
Well, and for good reason. I mean, we saw their, as you mentioned, the real estate collapse that they had and the structural issues in their banking system because of that, and the massive amount of wealth that was essentially wiped out. So, whether the Chinese population isn't spending enough, or do they even have the money to spend? If they had a lot of their savings wiped out, all held up in these real estate investments, and they lost a lot of trust, as you said, that extra money that they have, they're not going to be as willing to throw it into investments or portions of the economy to grow it because they've been burned in the recent past. And I think that's always something to kind of be challenged with. We talked about this last week with just market participants in Germany versus the US, where you have 14 to 19% in Germany, I think it is.
It's 17.
17%. Who are in the markets, where you have nearly 60% of people in the US in the market. So, there's this, people are being burned or more hesitant here in Europe and in China, potentially, to get those economies really moving at the pace we'd like to see them at. And in the US, we have so many market participants, but we start to see these structural issues with, personal savings dropping incredibly, debt rising, initial jobless claims are up again this week, higher than expected. Not wildly higher, but still there's this kind of this little trend. They're still in decent territory. It's nothing wild, but there's this kind of underlying, the US economy has a bit of a stomach bug. And it can turn sick, or it can go into a soft landing that everyone's claiming we're going to have. But we'll have to see. I mean, we'll have to see come to the September interest rate decision in the US. But clearly there's some really tough moving pieces in the world economy right now, and the major players are kind of lagging a bit.
Yeah, and since we're talking about China and the US and making this connection, it's also interesting to see during the first half of the year, especially in May, the Chinese people and the central bank from China, People's Bank of China, it's called. They sold US investments, mainly government debt, worth of almost 43 billion in May alone. Wow. And over the first 5 months, they sold US investments worth about 70 billion. And that's the biggest amount of sales there has ever been from China. And we have to recall that China is the biggest holder of US government debt.
Yeah, and especially with all of the news coming out of the BRICS nations and all of these trade agreements popping up with BRICS nations, especially China,
Right.
India, Russia, and Brazil, with all of these minor economies, but everything in their local currencies. Now, that could create some serious volatility at the beginning,
Yeah.
but if they can find a sustainable path, it kind of makes sense in line with, hey, we're trying to get rid of the US dollar in terms of how our economy is going, and we're trying to go to local currencies, so we're selling off this US investments in line with that, which poses a challenge, certainly, to the world economy as it starts to function maybe or look for new paths. So it's something we're going to have to follow quite closely to see what the outcome is. Again, I don't think there's going to be serious, crazy change. I mean, we're talking about the highest amount of selling ever, but we're still in the billions. We're not in crazy trillion numbers that it could be, but it's still
But
concerning.
the sentiment is very clear, and we also see from the US perspective, whenever they try to sell government debt, it becomes harder and harder for them to find buyers.
Correct.
And if they flood the market with even additional government debt, I mean, who is going to buy that? And that's kind of my critic, that to a certain point it makes sense to raise government debt to so that you can spend and support your economy. But there is a certain threshold. If you go over that and stay above that for too long of a time, then it can really become an issue.
Yeah, especially looking at the environment in the US in terms of who is the largest holder of US government debt.
Right.
The people of the United States. And so if trust gets lost there, the US government in terms of their debt's going to be in a lot of trouble. But with that, let's move over into the ECB, the European Central Bank, and their interest rate decision. They essentially didn't change anything, citing that inflation pressures are still there, and so that they want to continue in that fight. What were you seeing that you thought was valuable?
I think that was not too much of a surprise. It was pretty much expected this way. And I think it's a wise decision to just stay the course currently to look how everything develops. As you just said, inflation is still up. It's still considerably above the target rate. And so they really need to have the flexibility, especially looking ahead and seeing the risks that there are out there. So if there is anything happening to the economy or to the economies in Europe, that they have still some wiggle room to reduce interest rate to react properly to any downturn.
Yeah, and I think what's also important to kind of state is we're talking, it feels like a high interest rate environment at the moment, but these are actually normal levels of interest rates, somewhere where it's kind of healthy. And I would say, they're not relatively high. They're not relatively super low, but they're kind of in the middle, I'd say on the lower end of the middle range. And that's okay for an economy to kind of figure things out with that. And I think it actually creates a better environment for businesses to make better decisions, to move forward and to say, okay, well, there is going to be some cost to us growing. So let's make sure this is an effective, sustainable growth. If we're going to take on any kind of debt, if we're going to take on any kind of credit. And so I think it's a great decision that they kept it there. Like you said, none of us were surprised. Inflation had been falling, but it's kind of stagnated at the moment in the European countries. And I think they're actually in a really good position to build sustainably for the future. Again, a lot of hard road ahead, but it'll be fascinating to watch through it and as we go. Do you have anything else there?
No, I think we are on a good path, and we have to see what the September meeting will bring.
Yeah, absolutely. So next week, we're going to be talking about the German consumer sentiment. It's been some disappointing numbers in the past, so that'll be interesting to get into next week to see where the population of Germany is feeling. And then we're going to be talking about the U.S. gross domestic product growth. I think it's quarter on quarter is next week's release. With the incredibly disappointing GDP numbers that were brought out last, that'll be really fascinating to see, okay, has it changed? Is it still going in that disappointing direction? Are these cracks really pulling down on the economy?
Wonderful.